Hello everyone, and welcome to the January 2025 LF Decentralized Trust Financial Markets Mortgage Subgroup meeting. There's a lot of things going on in Southern California and across the country. We hope that the people that are being impacted by those events are okay, and our thoughts are with them. Let's go ahead and get started on today's webinar. Key blockchain developments in mortgages, tokenization, AI, and real estate in 2024, and trends and predictions for 2025. As always, please note that this meeting is being recorded and under the umbrella of the LF Decentralized Trust. So we ask that everyone abide by the antitrust policy and code of conduct. The antitrust policy states that we avoid discussions of company-specific pricing, products, and projects. We don't make negative remarks about other companies or products. And the code of conduct means that we treat each other with respect, never discriminate, and communicate constructively. We fully support the policy of openness, equity, and inclusion. Everyone's welcome to our meetings, and this is intended to be an open forum for sharing ideas and constructive discussions. Part of the change to decentralized trust includes new members such as Hedera, HashGuard, Banco Central, Polygon. I'm not going to go over all of these. This is just to recognize the trust general members and to say thank you to them. If you're new here, here are some tips. Feel free to alert. Don't wait for an invitation. Speak openly and just really welcome. Here's our agenda for today. We've covered the introduction, and next we'll go over some community information. James will then give us an update on blockchain in the mortgage industry. Then we'll do a quick video that's an encapsulation of 2024. And the last item on the agenda are trends and predictions for 2025. We always covered this slide in each meeting, and this is to reinforce that we're all on the same blockchain journey, though we may be at different points along that path. And this group is meant to help everyone in their blockchain journey and to, number one, demonstrate the feasibility of blockchain technology through mortgage industry use cases, define potential implementation path for the mortgage industry. What does a mortgage company need to do to implement blockchain, and how difficult is it to implement blockchain? The next several slides, I always mention for those new to the group or would like more information, but I'll go through them fairly quickly. This slide provides links to different resources, the Linux Foundation, Hyperledger Foundation, and so on. I want to call out the second from the bottom. That's the mortgage subgroup link that contains the meeting notes from our group, recordings from previous sessions, and the curated articles in the mortgage industry. James will cover this in a bit more detail in his section, and these are just great resources, and we'll reference them throughout the course of this presentation. If you want access to these resources, you will need an LFID. This slide will walk you through that. I'm not going to go over it, but this is very useful information. You can also obtain a Hyperledger Fabric certification. And then lastly, this is for those of you that are new to blockchain, here are some links to free blockchain training. I always go over this because this is how I got up to speed on blockchain, and this is very worthwhile information. So next, let's go over the status of blockchain, and I will hand it over to my good friend, James Hendrick.
Hey, Marvin, thank you very much for that intro. Again, definitely like to extend our thoughts out to those being impacted by the fires in Southern California, as well as the, cold weather that's streaming across probably half of the United States now. A lot of people are being impacted, and our thoughts go out to you guys. Let's go ahead, Marvin, and jump into the first article. So, we talk about technology all the time, and it's really good for us to check back in and what type of impact does technology have on mortgage interest rates? So digital platforms can reduce administrative costs for lenders. It enables them to pass on some of these savings to borrowers through competitive interest rates. By minimizing some of the inefficiencies, technology not only expedites the mortgage process, but it also creates a more competitive environment that encourages lenders to offer better rates. AI and predictive analytics analyze vast amounts of data, including credit scores, income history, spending patterns. These can help more accurately assess creditworthiness, allowing lenders to offer personalized interest rates that reflect the borrower's specific risk profile. Increased access to information helps borrowers make informed choices. Digital tools monitor market trends and rate fluctuations, allowing home or borrowers to time their applications when market conditions are optimal. In addition, aggregator websites and mobile apps also help borrowers to shop around for best deals. When we look at things like blockchain and smart contracts, they're beginning to have an impact in the mortgage industry and how transactions are conducted and recorded. So, as we know, blockchain provides a secure ledger for recording mortgage agreements, reducing the risk of fraud and errors, while smart contracts automate aspects of the mortgage process. These innovations reduce administration costs and streamline operations, potentially lowering interest rates for borrowers. Data security and privacy concerns always remain significant, and lenders handle sensitive information. Ensuring these digital platforms are secure and compliant with regulations is critical to maintaining borrower trust. And while technology has improved accessibility for many, it may exclude individuals who lack internet access or are unfamiliar with digital tools. So, addressing these disparities is essential to ensure that the benefits of technology advancements are available to all borrowers. So, great article with some great information. Take a look. We're going to be talking a little bit more, as we move along with today's presentation. And in fact, Marvin, let's go ahead and move on to the next slide. So, this next article brought to us by MPA Mag, it's an interview with Stacia Wishar from Delightful Refuge. And she's discussing the benefits of several topics. Things from AI underwriting algorithms that assess borrower risk more quickly than traditional methods, using a combination of credit data, alternative data sources, and predictive analytics to deliver faster, more accurate underwriting decisions. For example, using optical character recognition and natural language processing, mortgage originators can automate the reading, categorizing, and verifying of mortgage application documents. Blockchain can enhance the security and transparency of mortgage transactions by providing a decentralized and tamper-proof ledger. And we're starting to see more of a use of virtual assistants and chatbots. So AI-driven chatbots can handle routine inquiries, they can pre-qualify leads, and they can assist borrowers with status updates on their application, really providing 24/7 support to potential customers. Robotic process automation can automate repetitive tasks such as data entry, document verification, and compliance checks. And Stacia also discusses the use of AI in CRMs and predictive analytics. So, a great article to take a look at how things are being utilized on the front end of the mortgage industry. Let's go ahead and move into the next article, Marvin. So this is our first video podcast of the new year. It's brought to us from SunWest Mortgage. And in this episode of the Pavan Perspective, CEO Pavan Agarwal discusses the impacts of blockchain and AI in the financial industry. So we've had Pavan on this show previously where he's talked about Angel AI. And in this new podcast, he discussed how $180 billion is lost in the real estate industry due to trust management, or roughly 9% annually. Since 2028, Angel AI has over 137,000 users and has conducted 30 billion in transactions. In June of last year, they launched services for free credit repair utilizing AI. And later this year, they're launching an update for payday loans, reducing the traditional 150 to 200% interest rates on these short-term loans down to single and double digits. Presents also their newest innovation termed Angel Wallet, which is an AI chat-based wallet system that allows users to keep their digital assets secure on-chain. With Angel Wallet, a consumer's assets are stored on chain and are able to chat with the AI to manage every component and help create a true approval token, or credit twin, as he calls it, that represents their credit profile. Financial institutions can then bid on these tokens, and the AI engine will interact directly on their behalf. Pavan discusses the benefits these digital twins will provide as we head towards an artificial general intelligence in the future, which they deem being the next level of artificial intelligence, or generative artificial intelligence that we're working with now. The video is approximately 25 minutes long, and it's a fascinating presentation on the world of tomorrow. So if you have the opportunity to watch this one, definitely check it out. It's got some worthwhile discussions that occur in it. And Marvin, let's move into our last article. So as we'll be talking about today, what are kind of the future of mortgages? What are some of the things that we see coming up in 2025? So with digital transformation, AI is going to play a significant role in enhancing the customer experience. Everything from AI-driven chatbots, predictive analytics for loan approval, and fraud detection systems will start to become standard. By enabling secure, immutable records, blockchain can revolutionize how properties are bought, sold, financed, helping to reduce fraud and speeding up transactions. And we're seeing more and more the use of e-signatures and e-notarizations over the last several years. And we anticipate we're going to continue to see that as we move forward. The article also talks about personalization through big data analytics and how it will help empower lenders to offer more personalized solutions. By analyzing a customer's financial behavior, employment history, and spending habits, lenders can craft tailored products that better meet individual needs. This shift will more likely improve approval rates and enhance borrower satisfaction. In addition, the regulatory landscape is continuing to evolve, and in the next few years will likely bring changes aimed at protecting consumers and maintaining financial stability. Governments may impose stricter affordability tests to ensure borrowers can handle payments, particularly in volatile economic climates, and stricter data privacy regulations may be implemented to safeguard consumer information. We're also starting to see the implementation of climate risk assessments, a very true topic to what we're seeing happening across the country today. Lenders might be required to assess properties for climate-related risks, such as flood zones or wildfire-prone areas, impacting approval processes and terms. We anticipate this will have a heavy impact in the insurance industries as well. We're also starting to see the rise of alternative financing options. So your traditional 30-year fixed rate mortgage may no longer dominate the market as alternative financing solutions gain popularity. We're starting to see more rent-to-own programs helping out first-time buyers overcome those down payment challenges. We're seeing shared equity models where co-investment in property with financial institutions or private investors. And as we're going to talk about in a little bit, we're seeing a rise in the crypto-backed mortgages, that are occurring. Through the use of AI-powered risk management, lenders will also increasingly rely on AI to assess and mitigate risks. Predictive models can evaluate market conditions, borrower profiles, and even geopolitical factors to anticipate potential issues, reduce defaults, and improve lending accuracy. Some other topics the article covers are green mortgages, loans that are incentivized to be energy efficient homes, general shifts in home ownership, and how the preferences of millennials and Gen Z will shape the mortgage industry significantly. Being a more tech-savvy generation that values speed, transparency, and flexibility. And finally, a focus on financial inclusion. So innovations like alternative credit scoring models, which consider factors such as rent and utility payments, will help underserved populations qualify for loans. So a lot of great topics. We've actually curated several other articles on predictions for 2025 that have some other topics that they've mentioned as well. Most of these are the most significant ones that we're seeing projected. But if you're interested in finding out more information, feel free to reach out and we'd be happy to share those articles with you as well. Marvin, let's go ahead and move into the next slide. So as we talk about every month, this is our wiki. Please do come get the opportunity to subscribe to it. You can take a look at our previous presentations, all of the articles that we've discussed today, as well as articles that we've discussed over the last several years, are available directly from the site. Check out the link at the bottom, make yourself a favorite for it, and come visit us on the wiki. And on the next slide, we also have our YouTube channel links, our YouTube playlist links of all the previous recordings. We have a Discord channel available out there if you'd like to reach out and connect with the community, and the LF Decentralized Trust Financial Markets Special Interest Group LinkedIn page. Take a look at that as well. Make a link. They're always communicating some great information. And Marvin, let's go ahead and move into the main presentation of our overview of last year and our predictions for 2025.
Thanks, James. We're going to go ahead and just play this really brief video that wraps up 2024. And so we come to the end of another year of change and new developments. From rebranding Hyperledger as LF Decentralized Trust to incorporating new and exciting technologies. James, what do you say we take a look back at the key moments and their impact on our industry?
Excellent idea, Marvin. It's been an incredible year of technological advances and impactful news. We'd like to thank our incredible guests who joined us from all over the globe for sharing their insights and expertise in a variety of technological spaces directly related to or having an influential impact on blockchain and the mortgage industry.
Tokenization was clearly one of the most significant developments in 2024. As Gabriel Sadoun from DigiShares mentioned, tokenization can provide distinct advantages in issuance, investor management, and trading. The mantra became faster, easier, cheaper, as a myriad of tokenization solutions, including DigiShares, NFT.ai, and Migrate joined us. I also had the privilege of speaking at the 2024 Token Expo in San Francisco and shared the stage with some of the most innovative tokenization companies, including Bitbond, Zeev, and GoLedger.
Throughout the year, we hosted some great presentations related to blockchain, joining forces with artificial intelligence. Conversations ranging from security monitoring and threat detection, enhancing data analytics, to the impacts for smart contract automation. It was particularly exciting in the spring discussing the use of digital identities with Kyle Lee, the CEO of NFT Inc., as well as Karen Kilroy, founder of FileBaby, on these topics. Then in July, we were honored to have David Coleman, the former president of Mismo, along with Devin Castor, the co-chair of Mismo's blockchain community of practice, join us to discuss their thoughts on what's ahead for blockchain and AI in the mortgage industry.
Another technical development we broached is quantum computing. I think we're just starting to see the impact of quantum computing in the mortgage industry, but areas impacted include AI, risk analysis, portfolio management, and data privacy. However, the complexity of quantum technology brings unique challenges, and the industry is just starting to develop an understanding of the technology, the risks involved, and strategies for mitigating those risks. Daniel Zago, who has spoken to our group before, outlines some of the burgeoning risks associated with quantum computing.
Towards the end of the summer and stretching into the fall, we covered some great topics. Rick Grant and Mark D'Angelo returned, joining us in August to discuss leveraging emerging data solutions and moving beyond traditional data standards. Always a pleasure to host both of these gentlemen over the years. In the real estate arena, Jim Dorsey joined us in September and presented a demo on the Migrate app, utilizing blockchain to connect home buyers and sellers directly. Followed by Teresa Grobecker in October, sharing her blockchain journey migrating the consortia property management and verification system from Ethereum to Hyperledger, and the learning lessons along the way.
A huge thank you to our distinguished guests and amazing viewers. Whether you joined us live or watched the recordings on the LF Decentralized Trust YouTube channel, you are the fuel that boosts our monthly meetings.
To our all-important attendees and viewers, thank you for your interactions and following us on the LF Decentralized Trust Financial Markets LinkedIn. And as always, we continue to bring you the latest news and updates from across the industry related to these technological advancements. We've curated over 350 articles for the community's reference since we initiated these podcasts over 3 years ago. We look forward to bringing you additional thought-provoking content in 2025. And thank you all for your continued enthusiasm and have a great holiday season.
Okay, I really like that video, and I like the music that kind of starts it off. One thing I did note, I'm still wearing the same shirt from that video, so you guys are never going to see me in this shirt in 2025, okay? I promise. I have a bigger wardrobe. As mortgage professionals and technologists, we always try to stay abreast of technical developments, and that's what we tried to do in 2024. And we thought that having that video just before we talked about trends and predictions for 2025 was a good juxtaposition of what happened and what we think is going to happen. So now let's talk about 2025, crypto, blockchain, AI, and quantum computing. From the dark days of the crypto winter that started in 2018 to Bitcoin's fantastic gains in 2024, crypto has seen a resurgence that few expected, me included. Now, what does that mean in 2025? Let's start off with CBDCs, central bank digital currencies. CBDCs have seen significant growth in Asia, Europe, and the Middle East, and the rise of the digital yuan and other CBDCs can have two effects. First, as a potential challenge to the dollar's role as the world's reserve currency, and second, as a means of a potential way of evading sanctions. What about CBDCs in the US? Despite President Biden's executive order pushing for research into the potential for CBDCs, the US is still ambivalent about a digital dollar. This may be a future item for the incoming Trump administration. And this last point, it's going to be an ongoing theme as we talk about 2025, that a lot of our predictions or what we think may happen is going to be dependent upon what the new administration thinks and feels. While The topic of CBDCs in and of themselves is a very interesting discussion. Overall, it is a little bit beyond the purview of our group, so we'll leave it alone for now. The next item, the corporate adoption of Bitcoin. MicroStrategy's early venture into Bitcoin is looking very prescient, and now others are following. US traded Bitcoin exchange traded funds have more than doubled their combined holdings over the past year, going from 650,000 BTC to an astounding 1.2 million BTC. Tether, the stable titan, the stablecoin titan made its largest Bitcoin purchase early in 2024 and adding another 7,600 Bitcoin to its reserves. MicroStrategy, true to form, acquired another 2,138 Bitcoin, reinforcing its status as a corporate Bitcoin juggernaut. I haven't checked Bitcoin as of this morning, but I think it's still trading above 100,000. So they're looking smarter and smarter. The improved outlook of crypto is due in large part, as I mentioned in the previous note, to Trump's imminent return to the White House. He ran in part on a pro-crypto platform, and many industry executives and analysts expect him to promote a more favorable regulatory environment for digital assets. During his election campaign, Trump vowed to replace the incumbent Securities and Exchange Commissioner Chair, Gary Gensler, who has taken up somewhat aggressive, or some people will say very aggressive, legal actions against various crypto companies. Trump has also indicated that the U.S. could establish a strategic Bitcoin reserve by pooling funds obtained through seizures from criminal activity. Trump is expected to issue an executive order directing bank regulators to go easier on the sector, and this may potentially happen as early as his January 20th inauguration. There are a long list of people in the incoming administration that are pro crypto, but I'm just going to go over a couple of them. For the SEC, former SEC Commissioner and crypto supporter Paul Atkins is expected to replace Gary Gensler. I've heard Paul Atkins speak before. Very smart individual. I think he was chairman of the Office of the Comptroller, but he is someone that is going to play a big role. CFTC, Andreessen Horowitz, policy director and former CFTC commissioner Brian Kintens is a leading candidate to head the agency. For the Treasury, hedge fund billionaire and Bitcoin advocate Scott Bessent is Trump's pick for secretary. And then the last one I want to mention as an AR and crypto czar is David Sachs, a longtime venture capitalist who worked with, and this name's not going to be new to you guys, Elon Musk at PayPal. So there are a slew of other people, but we just wanted to mention that because those people are going to be driving a lot of the regulation, and that gets us to our next bullet point. There are regulatory green lights, these names being just an indication of the much more positive or the much more beneficial regulatory environment for crypto. There's also a resurgence of crypto that includes interest in meme coins, from their low entry costs to their potential for explosive growth. Meme coins have become a favorite among investors. In Dogecoin has seen a resurgence as others, but we won't go too much into those. Let's bring this back to the mortgage industry. Prior to the crypto crash, there were numerous firms offering crypto-backed mortgages. And James alluded to this in his section. These dried up in 2018 as a result of the crash. Can we expect resurgence in crypto-backed loans in 2025? I think the answer to this is yes. Unfortunately, quite a few of the firms that did offer crypto-backed mortgages have gone out of business since 2018, but there are companies that are coming back that are going to be offering these. One thing to note, there are many more Bitcoin millionaires, especially within the last month, and others who have benefited from the growth of Bitcoin. And there are an increasing number of companies that will allow crypto holders to hold, to borrow against those assets. Let's move on to
You
our
know,
next item.
Marvin, it's actually pretty interesting in researching articles for our presentation today. I actually came across an article with Mike Cagney, who's the CEO of Figure. And in the article, he was discussing how blockchain has reduced the lender side costs so much that it's starting to make HELOCs more attractive to originate. So, as an example, assume you have a $500,000 home and a $300,000 mortgage. In the current world, you could borrow 100,000 from Figure at 10% under a normal HELOC. In a Bitcoin world, you could actually borrow 175,000 in Bitcoin held as collateral at 9%, or up to 300,000 in Bitcoin held as collateral at 10.5%. So I do think we're going to start to see a lot more of these products played with. As we talk about regulatory, I think that'll have an impact on it as well. You mentioned Bitcoin has been up over 100,000. While we've been sitting here presenting, I actually jumped on and it opened up at 95,000 this morning. It's hovering at about 94. So there's still a lot of volatility in that market that I think will have an impact. But as you mentioned, as regulatory reviews are going to be, taken a look at, implemented, this potentially has the ability to help stabilize the market, which may attract more conservative institutional investors who previously would have avoided crypto assets, leading to a more mature and reliable market structure in the real estate industry. So definitely we'll be interested in seeing what happens in 2025.
That's a great point, James. Thank you for adding that. It's always interesting to see what Cagney's doing. He's always been on the leading edge and been a strong advocate of crypto and blockchain, especially from his point within Figure and also through the partnerships that they've had with Provenance Blockchain. And we'll speak a little bit to that in this section as well, especially from an interoperability perspective. So just moving on to this next slide, let me just go through my notes here again. Tokenization was probably one of the biggest developments in 2024, and this will continue to be the case and probably more so in 2025. We've already spoken about Trump's potential impact from a regulatory perspective. One of the things that we found in our research as well is that Donald Trump and his son, Donald Trump Jr., are potentially developing a new real estate token project called World Liberty. And this is intended to integrate real estate investments with decentralized finance using blockchain technology. We're starting to just hear the rumblings of this. We are going to do more research. And as we find out more, we'll definitely bring that to this audience. So overall, the collective tokenization market totals 50 million, excuse me, 50 billion with a B, including public blockchain and private blockchain-based issuances, according to the security token market. This is a drop in the bucket for the $2 trillion and $5 trillion amount that Citi has been forecasting. $2 trillion from McKinsey, $5 trillion from Citi, and $5 trillion from Bernstein, and $10 trillion by Chainlink. So these are the estimates that these companies think that these tokenizations will go to within the next decade. This information is from Peter Gaffney's Opportunities in Tokenization 2025. It's a great overview for tokenization for 2024 and 2025, and I highly recommend it. Peter also spoke to this group within the past couple of years, so definitely someone who is very knowledgeable about tokenization. Gearing up for more traction within tokenization is credit card Visa. They rolled out a platform that lets bank issue fiat-based tokens. In November, stablecoin issuer Tether launched a tokenization platform. That same month, MasterCard announced that it's connected its token network with JP Morgan Chase to settle cross-border business-to-business transactions on the bank's Kinexus blockchain-based platform. And this starts to hint at the last bullet point on this slide is interoperability across these blockchain platforms, and we'll talk more about that. There's a clear, and this is a specific quote, that's a clear trend that will continue to evolve and unlock a lot of new business models. That trend is here to say. This is from Raj Damodaran, the Executive Vice President of Blockchain and Digital Assets at MasterCard. Kinexus already supports about $2 billion in transactions per day, according to JP Morgan. That's a significant amount. A slew of money market funds, many investing in US Treasuries, are planning to debut. Boston Consulting Group predicts that tokenized fund assets under management could reach more than 600 billion by 2030, up from about 2 billion today. That is phenomenal growth. To make such tokens more useful, the Commodity Futures Trading Commission is considering new guidelines for how to use tokenized assets as collateral. Part of this evolution will also entail the integration of AI. The rapid evolution of AI has opened up exciting opportunities for integration, but it's also raised critical questions about the integrity and traceability of the data fueling AI. And how can blockchain play a role in that? A standard for AI accountability is needed that would seamlessly integrate blockchain technology to ensure data integrity, compliance, and transparency in enterprise operations. By leveraging blockchain integrated traceability, a person creates immutable records of data transformation, offering organizations a way to ensure accountability, accuracy, and compliance in every AI initiative. Currently, users are unable to utilize their assets due to complicated bridging solutions, which disincentivizes users from moving their assets easily. So this hints at some of the impediments to blockchain and brings us to our interoperability issue. Instead of these separate blockchains, we need to provide users with an avenue to maximize their yield while contributing to the ecosystem. This can be achieved by giving freedom to token holders to move their assets from one chain to another without a lot of bridging transactions. The future of blockchain isn't about chains competing for supremacy, but about integration and interoperability. So let me speak a little bit about that. The foundation of the current blockchain interoperability lies in cross-chain messaging protocols. This enables blockchain to read data from one and send data to another blockchain. There are multiple cross-chain interactions currently in existence. It includes things like side chains, which are a type of layer 2 scaling solution. It also includes cross-chain bridges and also atomic swaps. I'm not going to go into the nuances of each of these because that can get us into a pretty technical discussion. But the future of blockchain is interoperability that doesn't entail these types of additional steps, but are more transparent to the user. So that's one of the things that we're really expecting to see in 2025. Let me pause there. James, was there anything you wanted to add to this?
Yeah, it's interesting. Some of the research I was doing, particularly relevant to tokenization, is talking about how real world assets could potentially hit 16 trillion this year, having a huge impact on how we own and invest funds. We're also starting to see an increase in fractional ownership of high value assets like premium real estate, allowing people not only from within the United States, but foreign entities as well to be able to invest in high-end real estate. It really creates a liquid market for traditional illiquid assets while slashing some of those transaction costs and settlement times so that we normally see. Interoperability to me too is that's going to be significant as we move forward. I think that's going to have one of the biggest impacts on the success of DeFi becoming or adopted as a mainstream technology solution across the financial sectors.
Yeah, absolutely. And it's great that you bring up that point because as I was researching tokenization, AI integration, interoperability, it really brought me back to that one webinar where we were talking about faster, easier, cheaper. And that's really where we think blockchain needs to go in 2025 and probably will go, especially with tokenization and interoperability. Hey, moving on to the next technical development, arguably the biggest technical development in 2024 was AI, and it will continue to be at the forefront in 2025. Right now, everyone's experimenting with AI agents, but realistically, I don't think anybody's making any real money yet. I think that changes in 2025. The foundational technology is ready, but companies still need to solve core challenges around data, data quality, operational costs, and building trust. AI agents continue to improve their ability to communicate and collaborate. Think about something as simple as creation of a market analysis for a product, for example, by AI. It sounds straightforward, but nobody has deployed it yet. The market's ready for practical solutions utilizing AI agents and chatbots that can demonstrate clear business value, ROI, and trust. And I think we are just starting to get there. And let me give you a little anecdote. Within the past month, I've seen several demonstrations of AI chatbots and agents that have frankly surprised me with how these agents and chatbots have evolved from early to even mid 2024 to today. Slow mechanical interactions have now become smooth and so lifelike as to really make something like the Turing test irrelevant. It's not surprising anymore to be interacting with an agent and not be able to discern that it is AI. For example, at one of the demos, I saw an AI agent incorporate external factors. It was a demo of someone taking an AI call and they were saying, I can't talk right now. I'm at my child's soccer game. AI responded, Oh, I see that you're at your child's soccer game. Would you like to reschedule to a more convenient time? So went through the machinations of rescheduling. Then the AI placed a follow-up call to the same individual. And one of the first things it asked, how did your child's soccer game go? It's important to be able to spend quality time with family. And this was something that it really impressed me because this was done without additional coding or additional development. It was a feature that was already inherent within the chatbot. James, was there something you wanted to add to this?
Yeah, you know what? A couple of thoughts as we look at AI. So exactly what you're talking about. Marketing is going to move beyond personalization into more emotion-driven strategies powered by AI that are capable of analyzing and predicting customer sentiment in real time. Instead of just looking at demographics or behavior alone, AI will tap into micro emotions detected through text, voice, video interactions, and really craft hyper relevant campaigns that resonate on a very deeply human level. So, as an example, imagine an AI system that adopts a brand's message based on a consumer's shifting mood during the actual interaction. If someone's feeling stressed while browsing, the AI can adjust the tone of the message to be more calming and reassuring and increasing the likelihood of engagement or purchase. The other big thing I foresee, Marvin, in the AI realm is going to be we're going to start to see AI decision making will become a regulatory necessity. Having that transparency into how did the AI make a decision, particularly when it comes to, approval, loan approvals, or pre-qualification. It's going to help drive the development of tools that make AI outcomes clear and actionable. Right now, a lot of it's a black box. You have information that's pouring into these AIs and decisions that are coming out of it. And I foresee not only in 2025, but as we move forward in the longer run, particularly in the financial industry, that having that transparency into that decision-making process is going to become more critical, even potentially regulated.
That's a great point, James. And I wanted to point out that in California, the California Residential Mortgage Lending Net, the CRMLA, requires that any person engaged in the process of making or servicing residential mortgage loans in California do so only under the authority of a license under the CRMLA. So if someone is using a chatbot to provide or answer certain questions under servicing or origination, and that is probably not allowed that because you require a license. You need to be a licensed officer to be able to do something like that. So it's going to be really interesting to find out to see how the industry and the regulatory bodies, as you point out, address this issue. And that's hopefully something that is going to happen in 2025. Another point I wanted to mention on this is here's a real interesting data point. Between 2024 and the start of 2025, there was a 10% drop in the number of mortgage loan originators from 216,000 in 2024 to 195,000 at the beginning of 2025. Some of this may be due to overcapacity in the industry, but as volume returns and as the need for MLOs increase, can AI help fulfill this role? And I think that's something that you and I'd probably say, given what we've seen, given our experiences, that answer is going to be a yes. They can, at the very least, play a guiding role or a partial role in something like this and hand off to a human. So I think that that's a real interesting development we're going to see in 2025. Another interesting quote I wanted to bring up. This was in the National Mortgage News because we've been talking about companies implementing AI. This quote, the bigger you are, the easier AI adoption is. For example, United Wholesale Mortgage is investing in AI to help streamline servicing options. Oh, I'm sorry, not United Wholesale Mortgage, UHM, which they are a company with over 100 employees in their IT team and is currently testing an AI voice bot, which it hopes to launch sometime in 2025. Bigger players such as Rocket Mortgage, United Wholesale Mortgage, and Guaranteed Rate are also innovating with in-house AI. However, the real interesting point is for mid-sized companies, especially for those that don't have large servicing platforms to fund this type of development, AI investments may not be as feasible in the current economic landscape. So just another data point to throw out there. And then the last one on this slide, James, this is from your earlier slide that I caught and noted. 60% of customers would switch from a company that relies too much on AI. So we've been talking about the ability to utilize AI, the more efficient that it's going to be. But if the majority of people are hesitant to interact with AI, what does that mean? Or does it mean that those people may not even know they're already using AI or interacting with AI? So, one last point on artificial intelligence. Okay, quantum computing. This is something that we just started to broach at the end of 2024. Despite all the progress and hype in 2024 on quantum computing, in many respects, quantum computing is still an experiment. For the mortgage industry, this is even more so. There are no mortgage industry use cases that I was able to see for quantum computing in development or even in the midterm. Here are some quotes about here about the state of quantum computing. Despite improvements in qubit count, coherence time, and gate fidelity, the technology remains experimental with broad-scale applications likely still a decade away. So if we're forecasting for 2025, then I think what we're saying is don't expect anything in quantum computing in 2025, maybe 2035. Key developments, here's another quote. Key developments in optimization, quantum simulation, and quantum machine learning show promise for specific industries like finance and pharmaceuticals, yet such challenges have high error rates and issues around scalability persist. So I think this reinforces what we're saying. Don't expect anything for quantum computing in 2025. Um, it's just too early in the technology's life cycle. It's interesting to talk about, and we'll probably continue to bring it up, but it's not something I'd bet the farm on. James, anything you want to add to that?
Yeah, I tend to agree with you, Marvin, is I think quantum computing is still in its very early stages. And in the financial world, maybe this year, next year, you might start to see some pilot programs that are starting to occur. In the real estate industry, or mortgage industry in general, I don't think you're going to see anything probably prior to 2030.
Yep. Cool. Well, that brings us to our Q&A section, but I don't think we're going to have too many questions here. I would like to add one final point. We are actively in the process of planning the rest of 2025 in our future presentations. As today's discussion has shown, technical developments within the mortgage industry continue to evolve and at an increasing pace. A lot of these developments have been outside the realm of blockchain, and when appropriate, we've tried to speak to those developments from a blockchain perspective. Our challenge now is how to continue to accommodate those developments, and if this is the correct venue for those discussions, or if there are some things that we ought to explore down the road. So we just wanted to broach that with this audience here. We understand that there are a lot of things going on outside the mortgage industry and blockchain, but we wanted to explore those as well. James, did you want to add anything to that?
Yeah, no, I think you're right on the money, Marvin. As we're moving forward, we're starting to see a lot of, different changes, the influx of, a couple of years ago, people knew how to spell AI, but they really didn't have a lot of information about, okay, how does, AI work? And nowadays we're talking about large language models and all sorts of different things that, a few years ago people weren't aware of. So I think we'll be looking to, continue to adjust our presentations and the information we're providing to the community, really to stay relevant to what are those impactful technologies that we're seeing coming into the industry.
Awesome. Well, that brings us to the end of our agenda today. We're almost at the end of the hour, so wanted to say thank you to everyone. If there are any future agenda topics or any feedback that you want to provide, please do so. Here's our contact information, and definitely check out our wiki. So we're going to give you back 5 minutes to your day. Thank you, everyone.
Happy New Year, everybody.